And our top focus remains the US-India standoff over trade ties. The United States crushing 50% tariff on some Indian products have kicked in. Those tariffs are the highest in Asia as President Trump pressed ahead with the levies to punish New Delhi for buying Russian oil. The new tariff will double the existing 25% duty on Indian exports that took effect on 7th of August. After years of nurturing closer economic and security links, India and the US now find themselves at odds over Trump's trade war that's been imposed. In fact, the sky-high rate leaves India facing a likely slump in trade with its largest export market. The tariff cast a doubt on Prime Minister Narendra Modi's plans to turn the South Asian country into a big manufacturing powerhouse. Higher US tariffs have put India's export competitiveness at risk compared to competitors like Vietnam and China. In fact, worries have increased over a trade deal as a US trade delegation that was originally planned to visit India for discussions starting 25th of August till the 29th has now been postponed. India is also looking to move away from the US and deepen partnership with other countries, including the BRICS bloc. Prime Minister Narendra Modi is set to meet President Xi Jinping next week during a security summit that is slated to take place in China. It will also be his first visit to the country in 7 years. And it is part of a larger effort by Beijing and New Delhi to mend ties that had fallen amid severe border clashes in 2020. Separately, Russia and India have also pledged to expand trade from $50 billion to $100 billion over the next 5 years. Certain key exports such as textiles, footwear and gems and jewelry are at risk. However, some vital sectors will not be subject to US tariffs. For example, imports of electronic goods will be exempted, protecting for the time being Apple's significant new manufacturing spending in India. Additionally, pharmaceutical exports will also not be impacted for the time being. The economic impact may be cushioned by the fact that India's economy is largely driven by domestic demand and not exports. So shoring up consumer and business sentiment is key to faster growth in the country, which is reflected in the government's plan to cut GST rates as well. Private consumption makes up about 60% of India's GDP. Also, according to Citigroup, India's annual GDP growth is at risk of a 0.6 to 0.8% decline due to combined 50% tariff. Still, the US is India's biggest export market with shipment of $87.4 billion last year, that is 2024. However, that amount still amounts to only 2% of India's total GDP. And joining us on the broadcast from Dubai is Dr. Suyash Bhatt. He's director at the Academy for Finance, Technology and Innovation. Mr. Bhatt, appreciate you joining us on the broadcast. US has, of course, officially imposed an additional 25% tariff on India. This is, as many would concur, a direct blow to India's biggest export market. Firstly, if you can break down for us the sectors that will take a massive hit and those sectors that still remain unaffected even as that 50% tariff comes into effect.
So I believe this is really unfortunate that the final 25%, there was a hope in the industry that there would be some kind of a resolution to this, but I think it has inevitably now become an order by Trump signing it up. The sectors clearly which get affected where we had an edge was textile to be a major part. And in fact, since the time the tariff talk started, we were in fact comparing our tariff rate with other countries, especially Bangladesh, China, Vietnam, because they are our competitors when it comes to textile. And this sector would definitely be hit very badly due to 50% tariff. The second is gems and jewelry, which again, you know that India is one of the largest exporter of polished diamonds and importer of these rough diamonds. So gems and jewelry sector would also get affected very badly. The leather and other goods are also in this category. Some machinery and chemical companies are also included in this. So, and you can see this from the stock market today. I think the Sensex fell by more than 800 points, and these are the very sectors which got punished because there is no near-term light in terms of how their earnings is going to get recovered. Also, I would say the silver lining in amidst all this is the exemption that we have on pharma, one of the largest exporter pharma, also electronics. Something very positive to know is that this year, since the beginning of 2025, India was the largest exporter of smartphone in U.S. And it was not China. So we were gaining this momentum, and I hope that this exemption remains, and that would help the domestic sector. To sum it up, I would say that there are some important sectors where American consumers may get impacted directly. Are the ones who are being left exempted, like medicine or pharma companies and the smartphone and electronics. Whereas on the other side, you have textile, gems, and jewelry and other sectors which will face the heat due to this higher tariff. And in fact, to counter this, the GST Council meets in the first week of September. So I hope that, and also the Prime Minister announced it on the Independence Day, that there would be a bonanza. I think the bonanza may come sooner than Diwali, I believe. And these are the sector which would get a positive note, because if you see currently, automobiles have 28%, and then some automobiles also have higher GST which has been levied on them. Same as with textile. So if there is a relaxation in this indirect tax, the GST that is there, and as per sources, we don't know still until the details are out. There will be only two rates that are mentioned, 5% and 18%. So this would really boost the consumption locally. And something very interesting for jewelry sector, which the government has done, is they have reduced the import on gold to 6%. So that is also something which, if the government also reduces GST on it.
Mr. Bhatt, I wanted to get your thoughts on how the Indian markets are also reacting. I get your point taken. But the Indian markets are about to close for the day. Both Nifty and Sensex are trading in the red. How do you see the market recouping the losses? Do you see them recouping the losses in the near term? That is one part. And of course, the second part being, where do you see this trade war headed?
Yeah, I mean, I believe the markets have reacted in a very mature way, I would say. I mean, you are not seeing a massive. Typically, if anyone would have heard that, you're being put 50% tariff on certain sector, any weak economy should actually get crumbled by now. But the market is showing a great resilience by not falling by 10, 20, 30% as it would have thought of. So markets are, they have corrected, I would say, by 800 plus point, but at 80,000. 800 is hardly 1% that you're looking at. So 1% correction here and there is, I wouldn't say it's very negative, but at the same time, there are tough times that are going to come. So I would say that the GST reform would actually save the day in the country, because we are a consumption-oriented economy, only 2% is export. And I think the market participants also know this, which is why there is not a huge panic in the market.
Yes, Mr. Bhatt, point taken, and of course, as you mentioned, remains to be seen whether the market correction is short-term or longer-term, but appreciate you joining us on the broadcast. For now, the 50% tariff that's been imposed by the US on India has come into effect.